consumer expectations, are all about ease and speed. And, they want it to be seamless. They want it to be on 24 hours by 7, 365 days a year. And, I think the pandemic as well has kind of accelerated the demand for not only for faster payments, but also for more payment choices as well.
So customers expect all aspects of their payments experience to be convenient and also instant. And that's just as they would do with many aspects of their lives. So these demands of instant and convenient apply both to the onboarding process and also to the payment experience itself. So tech and fintech need to make sure that everything they build has the customer and their experience at its heart.
Consumers don't care about payments. What they want is to be able to buy stuff quickly, conveniently, and easily. And that's what we need to give them, but even more than we ever had before.
There's a whole new lot of consumers coming up. Those are Generation Z and Generation Alphas, and I talk a lot about them because their expectations are totally different. They are digital native, so the kind of experience that they demand in payments should be inherently digital. And that is something that anyone working on payment should keep in perspective.
The customer wants some seamless way to transact. They want to be able to do this, and either they defer payment or they pay everything now, and then ultimately be able to change my mind. And so I think that's where the world is headed these days. Is people just want really the freedom of choice and not have to think too hard about it. From a credit perspective, open banking is hugely insightful. If you want to try and analyze the affordability for a customer rather than simply the credit worthiness, open banking has really been a massive step forward. We can really see the cash flow the customer has, when that ebbs and flows, and make the appropriate decision based on this. So open banking for me has been quite transformative.
The most important thing that open banking has done to reshape the payments ecosystem is it's allowed people to manage their money much easier, giving them more tools. And after all, there's many people out there that are excluded from the banking system, and these money management tools are there to educate and help bring more people into the financial system.
Going forward, how can you combine the two, the open banking data alongside the payments, so that potentially there's an automated system around when certain things happen, payments are made from between different entities at the time? And so open banking has definitely had a huge impact. It's got a lot of way to go in terms of adoption.
What we all know is that open banking adoption and uptake has been slow. Banks really aren't investing much time on it because the customer adoption is low, but customer adoption is low because the current process is slow and clunky. So it's a real vicious circle.
When you're looking at moving money through an alternative rail, bank to bank rather than through the payment schemes, it opens up masses of opportunity, particularly around the use of the data attached to a transaction. And if you're able to use that data to add more value, to improve the personalization of the product or service that's being delivered, or to do it in a way that really rewards and incentivizes loyalty, then you've got the potential to be having an intelligent transaction rather than the dumb one. That's the potential for open banking.
Integrated payment is something that's going to change complete landscape of payments, and it's a kind of extension to open banking. But I think they will far surpass open banking because most of the entities that are providing embedded experience are non-banks and non-fintechs, and they are incorporating payments within their existing journey, existing use case.
It means that we can bank with who we want, when we want, and you start to buy into the brand versus just buying into a financial institution.
Payments going to become something that's more invisible and less of an active methodology, something that people consciously think about doing rather than just simply authorizing.
Banks, I think, whilst they might own the customer experience today, in the future, as we've seen a little bit with Klarna. That's a really good example of an embedded payment experience where the experience is moving more to the supplier or the retailer away from the bank itself.
Making sure that payments is a natural, seamless, effortless part of people's lives. And whether it's driving a car, shopping, cooking, traveling on an aeroplane, that the ability to acquire the goods and services you want is done in the most convenient and the most value-adding way. That's what integrated and embedded payments is all about.
The problem that we find actually in Europe is a lack of access to instant payment schemes. So some countries have yet to develop instant payment rails, or perhaps some countries have developed these rails, but not all customers can access them. And this is customers like our end users. So for example, individuals, their bank, for example, may not be a part of a country's instant payment scheme. And also what we at Wise find is that actually there's sometimes limited access for corporate customers. So for example, our banking partner doesn't allow us to connect to instant payment rails. So in terms of what needs to be achieved here and what the future roadmap should look like, all countries should obviously implement instant payment schemes. Banks should become members of that payment scheme, all banks that is, to give universal access to customers. And banks should open access to instant payment schemes for corporate customers where they don't already. And then there's the additional plea of, well, the direct access plea. So that's for giving direct access to payment schemes to non-bank payment service providers.
What we're going to see is an increasing amount of collaboration between those people who are serving businesses with accounting software, with supply chain management capabilities, or with things to do with expenses management and financial management. And they will become even easier, even more insightful, and even more data rich. So what this means to the businesses is that payments will become increasingly more central to their business operations.
Certainly one of the major pros is that fundamentally we are democratizing access to free or very low cost credit. That is a fundamental pro. I can honestly say there has never been a more responsible way for a customer to defer payment. Never, right? I mean, if you compare this against credit cards, running credit, of course, payday loans, if you compare it against traditional lending, if you compare this against even bank overdrafts, it's far more responsible and certainly cheaper, and in most cases actually completely free to the customer. So one of the major pros is that you're really seeing this democratization of free credit happening. Of course, one of the cons that has been argued is the understanding of this product. And do customers really understand that this is a debt instrument and that, of course, it does need to be repaid and creates a liability for them? And so, I would say, though, with this con, there are so many inherent consumer protections built into BNPL that we don't necessarily see this to be the case. I think the regulator's doing a phenomenal job at taking a view right now as to how they come to grips with this new way of paying and ultimately solve for this potential problem.
How do we protect individuals when they already have some debts? Are they using buy now, pay later to pay other debts? How do we prevent them from kind of getting into that debt spiral? But also we need to increase the transparency across the industry of buy now, pay later. So for example, Klarna doesn't publish their payments to the credit unions, as an example. So as a bank, you can't get that information to understand your customer's credit score in enough detail.
I think what we're going to see going forward is increasing regulation by the BNPL community, and as a result, we will see consumers more protected, which is what they should definitely be.
Payments are no more boring banking transaction, and it is really fascinating to see that how payments are taking backseat, but still customers are doing more payments than ever before.
We're seeing AI used more in payments, and that's seeing shifts, for reducing the need for so many manual processes, and also slashing time-consuming processes and speeding up data entry.
The EU's review of the Settlement Finality Directive is one of the most exciting opportunities across Europe. Basically, what this would give us the opportunity to do is basically place a less reliance on commercial banking partners, and allow us to use payment rails as direct participants.
The whole move of payment infrastructure, moving to something that's far more virtual and contactless, is something that's really very interesting. Outside of this, embedded payments is certainly really interesting. But I would say that payment that is seamless without a specific token required really is what we find fascinating. And, we think that that's probably the direction of travel for payment in the future. What's
going to be really interesting is to see how consumer behaviors change, how consumer needs change, and how the payments industry is going to adapt to that. Some of the more traditional payment methods will hang around for sure, but we might see some dip as more open banking technology becomes available.
We'll only capitalise on the opportunities in the future if we dance the jig between changing regulation, changing technology, and changing consumer needs. And we'll do that best if we work together, talk together, and collaborate. Yeah.